Super cool to see. Today we're going to be talking about risk and capital for space businesses in the broader space industry, or if that's even really what we should be calling it. Before I let my panelists here introduce themselves, I wanted to do a quick context for what we'll be talking about in a little bit more detail. So it's often easier, I feel like, to refer to the space industry as an industry, but in reality, it isn't an industry, it's a place, it's an environment. It's a space that you can go and do something in, it's a resource that you can leverage. And so there are many different kinds of businesses that leverage the environment, operate in the environment in some way, shape, or form, and they are all very different industries or different segments on their own. And the risks and the capital requirements for each of those businesses, each of those segments, are equally different. This panel will bring you operator and investor and insurer perspectives on the unique risks for doing business in space, what it's like to try to capitalize these businesses, what it's like to try to make money then on those investments. Hopefully you're able to walk away with something practical and tangible today is our goal. So with that, I'll let you guys introduce yourselves.
All right, hello, I'm Brannon Jones. I'm a venture capitalist at a firm called AlleyCorp. We're based here in New York City, early stage venture capital firm. I focus on deep tech for our firm, so it's robotics, a whole lot of aerospace, manufacturing, and also energy. My background is mechanical and aerospace engineering at Princeton down the way, and then I was at SpaceX doing robotics and manufacturing and propulsion engineering before I jumped over to the finance side and moved to New York City. So really happy to be here. Have seen it both on the operating side, also on the investing side, and have a lot of thoughts about doing that here in New York City.
Hey everyone, can you hear me? Hello.
The old school one?
Yeah. I don't want this anywhere near me. I think it's on. Now it's on. It's okay, whatever. Hey everyone, nice to meet you. My name is Tej. I'm CEO of a company called Nebex. We are a financial exchange for cross-border space transactions. And I don't mean the border between Earth and space. I mean when a government in one country needs to buy commercial supply from a company in another country, there's a lot of friction. Taxes, tariffs, import-export, geopolitics, geo-return politics, and that is a massive opportunity. And that friction has been solved in every other industry, just not in space. And there's a very historical and important reason why that's the case. But this is an opportunity for a city like New York and people with that financial sense, the space sense, and the political sense to create a lot of value for the World Space Agencies and for great startups like Icarus. If you haven't met them, you should talk to them.
Sure, it's cool.
Yeah, they work out of the Brooklyn Navy Yards. I feel like it would be, you should too, sorry.
First.
Yeah. You got to invest in Nebex. So. I was most recently CEO of a company called Axiom Space. We sent 4 missions to the ISS, private astronaut missions, commercial missions, 16 astronauts, 12 different nations, deals ranging from 50 million to 150 million, Saudi, UAE, India, Italy, Sweden, Turkey, Poland, Hungary, and some others I'm forgetting right now. We also sent the first cloud computer space with AWS, the first assistant with Alexa, both are Amazon, wearables with Whoop and Aura, first champagne bottle, first cancer drug that got FDA approval for human testing on Earth, first diabetic blood, first insulin, and many other firsts. Underlying headline, it was $1 billion of revenue brought into the company in 3 years. And kind of the underlying headline of that is it's $1 billion of net new revenue brought into the economy. Not a NASA contract, not something that someone had predicted would be there, but deals that were created, value that was created for the rest of the world. So now what I'm trying to do is bring that to startups everywhere.
Hey everyone, my name is Sherman Williams. I am also a VC. I'm at AIN Ventures. We're a pre-seed, seed stage deep technology fund. We specialize investing into companies that are dual use. My background is Naval Academy Annapolis, then Master's University of Chicago, spent a lot of time as an M&A banker here in New York City, and then made the switch over into venture capital where I always wanted to be. Our team is, heavily defined by a lot of us are veterans, scientists and engineers, and company builders. So great to meet you all.
Hi everyone, I'm Chris Kunstadter. First I want to thank Empire Space for the invitation putting this panel together. I think it's a great collection of really interesting people. I spent 40 years as a space insurance underwriter, managing a team of analysts, putting together insurance for clients. We were the carrier, we were the insurance risk-taking entity. I left about a year and a half ago, set up my own consulting firm, so now I'm doing my own LLC, Triton Space, and I advise commercial and government clients on managing risk in the space landscape. Quick question for the audience, who here enjoys paying their insurance premium? That's what I thought. Who here has ever collected a claim under your homeowner's auto or any other insurance? Yes, this is why you're paying that premium. And not that I can one-up Tej, because he's done an amazing thing throughout his career, but the most interesting thing we ever insured was 3 bags of rolled gold pretzels that were sent up to the Mir space station to film an ad. Well, the Mir space station developed a humidity problem, and they missed their window for filming the ad, which was going to be Jason Alexander on the ground talking with the Mir astronauts. So we actually paid an insurance claim for 3 bags of rolled gold pretzels, and I wanted them as salvage, and they burned up in the atmosphere. So that's my little story.
So you all have seen many different parts of the space industry for many years. You've also seen plenty of other industries that are not the space industry. What risks do you think uniquely define the space economy?
So I know we're talking about capital risk and growth, and for financial people, particularly these guys next to me, and even in insurance, it's all one and the same, right? Without risk, we can't really create financial products around it. I think one of the risks on a macro level for space is, whether it's an industry or an economy, not like it's a place, but for venture capital and for growth, it is not fundamentally set up as an abundant growth economy, like Silicon Valley, like media, like manufacturing, like shipping, like anything. It's literally by definition a zero-sum game. The government puts money out, and then a bunch of companies compete, and only one wins. That's literally the antithesis of Silicon Valley. So the fact that we have a system that is completely closed and doesn't create value, it creates incentives for people to guard their slice of the pie as opposed to grow the pie. So I think that's the single biggest risk in terms of this actually becoming a business.
Well, okay, well, I do want to answer your question, but I also wanted to ask you a question to your statement there. But isn't there more than that possible, right? Doesn't telecom have a whole commercial industry? Doesn't Earth observation have the makings of a commercial industry? Isn't it not? I mean, it's mostly the government putting out big contracts and then SpaceX doing what they want, and that's most of the industry, but it's certainly not all of it. It doesn't feel like it's the full promise of what it could be. You think about all the economic value that even something like GPS creates. I'm not sure what you think about Elon's data centers and space play, but if you were to do that, that also would create a bunch of value for all of us using the latest models. So it does feel like there are the bones and the desire for an industry that I think is more open, is broader, has more potential than potentially that framing.
Yeah. So we're saying the same thing, right? Because we believe in this future, and this is what America is all about. This is what New York is all about. We invest in that growth. If you don't believe in that future, why would you put your money towards it? So everything you're saying is correct. However, when it comes to regular economics, there's demand and supply. And when there's a gatekeeper blocking the demand, I'm talking about the United States government and NASA here, I'm not putting it down, there's no way we could do this without it, but I think it's artificially creating demand and supply. So every startup here, I'm guessing, is going after a NASA contract or a Space Force contract and going after that one customer. In the summer, there's going to be a very valid second customer, which is SpaceX. They could already be that.
Yes.
If Elon wanted to make his own space stations. Yeah, we know, right? And that's the example I'm talking about. Station companies, 4 of them competing to kill each other to get this one contract that just got canceled. Right? What do you tell all those investors? Right? Like that we were going after a contract that was completely controlled by this arbitrary policy? You know, like it's weird. Now, if Elon wanted to put a lunar base on the moon, he could. He's about to have $2 trillion to do it too, right? You know, so I'm not debating it, but the problem right now is when the core fundamentals of the business is like, okay, there's a dam and it's holding all this water, but you say there's no water coming because the person who controls the dam doesn't open it, right? That's where I'm going with this. And I'm saying this is the disconnect between venture and space, not venture and government, venture and space right now.
The other issue is, space, hardware is hard, right? And right now, we don't have the ability to do, at any sort of scale, other than Northrop, we don't have the ability to do in-orbit assembly and manufacturing, right? And so, OSAM or ISAM. Servicing, assembly, and manufacturing. So he's putting up a single-use disposable, so there's a big problem there. So hardware is hard, number one. Number two, it's even harder because you only have one shot. There's so many satellites that are on orbit that are bricked. I think the number is like 30 or 40% of satellites that go up. I think the number is like 30 or 40% of the satellites that go up are bricked. So that's another massive issue. Just that kind of one-time case there. So, and as far as analogs, I've actually thought about this a ton. I'm pretty sure there may be a book out there about this, whatever. I don't know why we don't look at parallels from when the Europeans came to the New World. Europeans went down to kind of Indonesia, like British East India Company, Dutch East India Company. There's wild parallels between those, what occurred there and how things could shape up in space. We're not starting just fresh and anew as humans. We've seen things somewhat like this before with certain societies, right? Back in the day, I'm a Navy guy. Your ability, Christopher Columbus was commissioned by the King of Spain, right? And so, like, that was his right to actually go to these places and claim this land or whatever have you. He was, eventually over 100, 200 years later, those folks were protected by those militaries and navies, the British Navy, the Spanish Navy, right? And so there's a tremendous amount of parallels on how I think this could shape up and will likely shape up over time.
Just a few comments. From my point of view, I've been in the technical risk business for a long time. Space insurance is really a critical enabler of innovation and investment because without space insurance, without insurance for the technical risk of launch vehicles failing or satellites failing or what have you, it would be very difficult for innovators to get investors to buy into something that's so risky. When it comes to, for example, first flights of new launch vehicles, when a new launch vehicle is introduced, just since 2015, the failure rate of first flights of new launch vehicles is nearly 50%. Nearly half of all first launches fail. Now, that's not a bad thing. It's where you want to have your failures. You don't want your failure on your 6th mission or your 10th mission or what have you. So space insurance really does take virtually all the technical risk of launch and on-orbit operations, even re-entry and pre-launch activity. It's all encompassed in the space insurance product, and it really is it's a critical tool for investors and innovators.
So a lot of this was good. I agree with most of this as well, and I think a lot of folks in this audience probably would as well too. This is very high level. I want to make it a bit more practical for a second, more from like an operator perspective. What risks do you constantly see either new founders or scaling stage executives conveniently ignore or unfortunately ignore or miss? What is constantly swept under the rug in the name of just trying to keep the thing moving?
Yeah, I think one of the biggest ones, at least at the early stage, is really thinking about that customer and contract risk, and there's kind of a trust risk that goes along with that. I think we're quite aware that at the early stage, there's huge tech risk. Hardware is hard, space is unsuitable for anything living, and seems to be unsuitable for most of our machines as well. And so people are aware that it's hard to build things for space, but then just the complexity of selling through the government, of how do your contracts actually transfer to the next one? How does that vehicle get funded? And the people funding it aren't really always the end users. And the case for making the argument for the use case, you have to make to various different parties. And so it can end up being quite opaque. And even once you get through all of that, then you have to ask a mission, a national security critical organization to trust you to put your random AI on their mission critical hardware, and you're some unknown entity and startup. And I think we see founders underweight kind of the hill that is to climb, and how early you need to start making inroads simply to build trust, which is almost kind of the human element of them being willing to take the risk of you putting your technology into theirs. This is right.
I'll take a slightly different approach. I agree with everything. Just for Evan, thank you. He thanked you first. You weren't in the room, so I don't want to take credit, but for Empire Space, this is really cool, and this view is incredible. Just kind of crazy to think Alexander Hamilton rode a boat from like right up there, went over there, got shot, came back.
That's what I think when I see this too.
When I also think about it, if anybody's going out to Jersey, when you drive out, the first service station is called Alexander Hamilton. It's a Sunoco gas station, as I call it. But the risk, I'd say, is in your question, I'm gonna index more on what founders do wrong. So obviously, these are all the challenges, the technical challenges, the risks they have to do in building their products and their businesses. I'm going to go into the risk when it comes to fundraising, right? So I think a lot of founders, if you choose the route to start a company, right, and you're the founder and CEO, you have a job, which I believe, having done this a few times and done it wrong, I appreciate you saying we're right. I know I'm wrong way more than I'm right.
You learn now.
No, I was right when it mattered to be right. Right, so you got to try. But when you're a founder and you're going out there, I believe you have 3 jobs. Hold the vision, hire the best people, and give them the resources they need to be successful, which means capitalize the company. So when it comes to capital formation, fundraising is a full-time job, and it's a hard process. It sucks. Like, you get rejected 99% of the time, right? Maybe later you get a little better at it, but in the beginning it's hard, and people say it builds character. No, it sucks, but it's getting rejected, but you gotta understand who you're selling to. And venture is a class, right? Like, think about the NVIDIA at $5 trillion market cap right now, Google, Microsoft. There was a time, I keep looking at you because you look really young, but in 1995, the top 5 companies in the world were, by market cap, were Exxon, GM, Walmart, I'm missing 1 or 2, but old school technologies. By 2005, just 10 years later, it was Microsoft, Amazon, Google, Facebook, all venture-backed companies, right? So the new world is one where you got to be pitching that vision, and unfortunately, this is what I think other founders do wrong, is the business model innovation matters. Doesn't mean you need to know what it is, doesn't mean you need to be profitable right now, but I don't think winning a government contract is a business model. And I don't think the onus is on venture, I don't think the onus is on the government, I think the onus is on the founder, because that's the job you chose. I keep looking at you.
I think it depends on who you're raising from, right? So if you're raising from, like I say, friends, family, and fools, then it's really about your network, effectively, to get a reasonable amount of capital. But if you want to raise some venture capital, I think that where founders, particularly in space that I've seen, a lot of times they're technical. Most people are not building a space startup in their garage. There's a paper trail of that human being. They have some sort of advanced technical degree, or someone on the team has an advanced technical degree, and they're building something based on someone else's research, right? Or their own research. They've invented something. So that kind of person sometimes will not just want to swing big enough. They just don't go bigger, right? They're not as ambitious Now, that's a good thing probably in New York juxtaposed to, let's say, a lot what you see on the West Coast, where you see effectively charlatans that get funded and they kind of fake it until they make it, you know? So it may be somewhat of a good thing, but there's a balance there where you want to be practical, but you really want to be able to sell a vision of how big something can get. And I think a lot of people, fail there. And I think you're right with respect to a government contract is not the win, but I will say that if you're putting actual hardware into space in the year of our Lord 2026, or whoever your Lord is, you are almost certainly dealing with the United States military, right? And you just need to understand that. And then from there, the United States military, between active duty military, reserves, National Guard, and civilians, is about a 3.5 million person organization. It is effectively the world's largest bureaucracy. The budget is, I don't know, $1 trillion or whatever it is a year, right? People do not understand how to navigate that bureaucracy in the ecosystem. And unfortunately, that ecosystem can change dramatically every 4 years, right? And the way that the system is set up to prevent corruption is people move out of jobs every few years, right? So therein lies the game. Those are the cards, right? Figure that out, right? So what people haven't done is they haven't been thoughtful about, it's kind of like go-to-market in the civilian sector, right? Being thoughtful about your go-to-market when it comes to government, understanding who the PAE is now, who used to be called the PEO, these ridiculous acronyms, right? And people don't understand it, don't respect that enough. And I've seen so many companies say, I'm gonna build this, I'm gonna build this in a commercial way, da-da-da. They basically fail almost, but the military has been seeing that they can do something with them. They get a government grant, they exist off grants until they switch their vision, start talking about the government and the military a little bit more, and then they're able to raise venture capital funding because the vision starts to make sense. So that's another massive thing that where founders make a mistake when it's specific to space technology.
You know, my 3 panel mates here are professional investors, so what they say, take heed, okay? I'm on the other side of the equation. I love mentoring startups who come to me and say, hey, do I need insurance? How do I manage risk? That sort of thing. But some of these companies, a few of these companies, I see, they come to me with this plan and they've raised money, and I say, that's a business plan? You got investors to buy into that? I'm amazed, because, and purely from a technical or programmatic point of view, I think what I really appreciate is when a startup comes to me and says, we're building a new, let's just say, launch vehicle. And they don't say, we're gonna launch in 12 months. And they don't say, we're gonna launch in 24 months. They say, we're probably gonna launch in 3 years, just because we know it takes that long. So I think it's just not feeling like you have to give the investors the idea that you're going to do something that no one else has been able to do. Hey, it's great if you can do it. And Tej, you had a comment at an event yesterday about the word that you dislike most is no, right? Yes, let's try and do it. What?
Impossible.
Impossible, yes, impossible,
I've
right?
heard no since.
Yeah. That's the whole rejection thing. Yeah. From your kids, right? But anyway, so it's just be realistic. Be realistic and don't inflate your expectations because you want to get money from investors. Don't inflate your investors' expectations because you'll only disappoint them. So that's kind of my non-investor view.
Yeah, I'd just say it's a delicate balance, though, because we make our money off of inflated expectations. And the only people who have a less realistic vision for the future than the venture capitalists is the founders themselves. And so they're sailing to the new world, outer space, to go find gold that may or may not be there. And so we need to have some highly inflated expectation that there is gold out there to be brought back. you shouldn't inflate the expectations with your insurer, but with me, yes. And that's where we need to see, do our types of crazy kind of align? Do our visions for the future for, hey, what value actually could be created out there if it does work? Because the founder is under no illusion, just as we are, that odds are against you, and it probably will not work. But if it does, what could we find out there, right? So, I still do try to encourage our startups to think about, hey, what would it take to go faster? What is the bigger vision there? What could we create? If this thing does work, what could it look like? But small nuance from my perspective.
Sure, and that is, so I love the idea of, you have to have the vision, you have to have the story, you got to think big, like you're doing a hard idea, hard business or whatever, and so you have to have something to believe in to push you through it as you're exploring all of that. It is really kind of exploration for some of these things, but it's not that forever. It shouldn't be that forever. It can't be that forever. You want to make money, your investors want to make money, everybody else wants to depend on you as a part of a commercial ecosystem. So sure, step one, maybe even step two can be getting your check on a great story. But how does that change? When does that change? What do you do when suddenly that story doesn't look as promising, when you can no longer raise on vibes and hype and ideas, and you have to start showing traction? What do you do as a founder when that is maybe not looking so good?
Well, if you're Elon Musk, you call up Peter Thiel and you make him feel bad for kicking you out of PayPal and then give you $20 million to save your failed startup after you've blown up every single rocket. And then you can go on to be known as a genius forever. But outside of a Peter Thiel buddy who can magically dump extra money on you, Elon is a genius, but also he had some help. You can also lean on the networks that you do have. And if you have raised some capital, I think this is why it's really important to think about the partners that you partner up with early on, and the investors who say, look, we understand what it takes to build a hardware company. We understand what it takes to get to space. We understand what the timelines are. We know the risks. I know Sherman and his folks know the whole government contracting process. When our startups have issues, I call him and I say, hey, what should they do? It's important to be partnered with people who understand that process and can provide more than just the capital, because inevitably there will be downturns. And we're aware of that, and the founders are aware of that. And so I think that is where you lean on your investors. And there are lots of stories beyond SpaceX where your investor who backed you puts in more capital and maybe is the only one who really sees the vision and believes it until you do have some kind of breakout and inflection point. So there are other ways, but that's the first one comes to mind.
Yeah, and your question could be applied to any sector, not space, so startups and traction. But also, I'm assuming you mean money, revenue, customers? Fair enough. When I joined the space industry 5 years ago, coming as an outsider, I worked at Google before. I'm not a professional investor. I would say I'm a professional entrepreneur probably. Going to Texas and coming in as an outsider, already as a New Yorker and not from this, I was expecting some resistance, and I held a town hall. I was chief revenue officer. And I said, what does sales mean to you? And this was a virtual thing, so people put their notes in. And these are the people that built the International Space Station, right? People that literally that are my heroes since I was a kid. And everyone wrote used car salesman. That's what sales means. I think a lot of you probably also feel it. I feel it too. Sales is kind of icky. It's bad. But what I told everyone was, if collectively, the taxpayers, put the International Space Station up and we value that like a used car salesman, to sell that opportunity, which is the greatest opportunity in human history, and we have the honor to sell it, how will any customer value it? And there's a mental shift that has to happen, and I'm getting to the point, which is when we talk about money, it's just a measurement. What does money measure? Do you guys know?
The cuteness of paying yourself.
Value, right? So just like centimeters measure length, money measures value. but you don't see people having violent reactions to centimeters, except for our founding fathers, who hated them for some reason. But we all have this violent reaction to money, because it is emotional. We all have some sort of money story that we tie to. We're all probably up here because of some story from our childhood. And that makes it weird. But from a science and space standpoint, it's very much like literal and bad. But traction doesn't necessarily have to be money. Money is just a measurement for value. So just go back 20 years, 25 years, 30 years ago. Google, which raised a ton of money, and when it was 2 or 3 years old, was building fiber basically out of 16th Street across to Europe and to the west coast of Africa. When they were 2 years old. $5 billion a year. Venture capital did that. A space station doesn't cost $5 billion. We can have as many as we want right now. We have that kind of money. The same week I raised my seed investment, there was this AI company, some Indian guy, who raised a $485 million seed round. Yeah, and our co-founder invested in them. And just a week later, they were negotiating with me, yeah, the max I can put in is this at this valuation. It's like, what the hell is that? 485 million, that's 2 modules on the space station. That's 5 launches. So traction can mean different things, right? And you can have time if you have investors that back it up.
Yeah, you definitely need to be thoughtful about, there are measurements that investors will accept other than revenue. I think Elon Musk is a great case study of that with respect to Tesla. But the other thing that you need to do, and I don't know if people do this, is and typically people who do this have some sort of, either it's intuitive to them and they're brilliant in that way, or they have some sort of professional services background, particularly consultants. They do well at this. And what it is I want to say something, capital efficiency equals credibility. Right? So when people give you capital, if you're able to account for it, where every single dollar went, right? And if things are not working out, things haven't gone as well as you wanted them to, but you can be you're wildly accountable. Your dashboard, like I remember when I was an M&A banker, I mean, God, taking 3 weeks to close a month and way too long to close a quarter, there's a high correlation between that company being crappy, right? And taking way too long. Some of the best companies that I saw, some of the best CEOs I saw, they had a dashboard every week. They know exactly what's going on with the company. This is the status of my company. A lot of people just are not able to do that, right? And then the other thing, capital efficiency equals credibility, to that thought process is being able to measure, is being able to measure things, right? And you can be capital efficient if you're able to measure things, and you can run these little experiments and say, hey, I tried this, it didn't work. I tried this, it didn't work. I tried this, it didn't work. I'm almost out of money, but I have these 3 or 4 other things I want to try. The market still exists, I believe it, right? I think we have a product that can get there and capture some of this market. Give me more money, even though I just spent all this other money, so I can run these other experiments. And a lot of times, if it's sound thinking, we'll say yes, right? Okay, here's more money. This makes sense. But if you're like, I don't know, the sales got sucked, or I just couldn't sell, or whatever, well then it's like, no, you're not getting money. You're not being an adult human where you can give me a reason as to why how you spent this money. We're not idiots, right? Brannon and I, we know that we're giving you experimental capital, right? We totally know that. So go ahead and run these experiments. But I want you have to do so, you have to work in a way that's wildly measurable, observable, and repeatable. That's extremely, extremely important. And you want to be able to display that to me and show me, right? And I've only had a few founders. Typically it's, I don't know, I've got a couple of founders that have done it, and they're just, I don't know how. I look at them, oh my God, next thing you start, I'm first person in for sure, right? You're incredible. And then the other people who I've seen have been able to do it, they had some sort of professional services background, and the other people are second or third time founders, right? Because they just lived it before, and they just know how it works, and they're able to just come up with like a dashboard or whatever have you to be accountable, so they can have the capital efficiency. So yeah.
So building on your earlier comment about the almost like the trust risk, or the risk of not necessarily being in a position to deserve trust or earn trust. That's something that is earned. You're not just given that. One of the best ways to earn trust is to demonstrate something, show that it's real, show that it works, regardless of whether or not it's generating revenue yet. It would be great if it was, but like you're saying, there's these other metrics, other ways to generate traction. Build something, show it works, and then show that people react positively to it. But sometimes that first of a kind can be extremely expensive, exceedingly expensive, at least in the context of this economy or like relatively earlier stage businesses. As investors, as an insurer, how do you approach characterizing, analyzing, making a decision on whether or not to take the risk to back not necessarily a full-blown venture, but specifically a first-of-a-kind project or a demonstrator or something like that? Whoever wants to take it first.
Yeah, I'll jump in with the sort of insurance. How does an insurer analyze risk? And I mean, I'll say, like I said, first launches are risky. New satellites, new applications, new technologies, they're risky. And as long as we know that, you can characterize the risk at least closely enough. You can reduce the variance on your estimate of what the failure rate is going to be enough that over the long term, you can develop a portfolio and hopefully make some money on the whole package. Now, you know, you may lose money on the most risky things, but you know what? Sometimes it's not even the most risky things that fail. Sometimes it's the most mundane satellites or mundane launch vehicles that out of nowhere have a failure. So one of the main principles in insurance in general, is fortuity. An insurance company is insuring against the unexpected, right? Okay, you have a launch vehicle, it failed, you fixed it. The insurance company isn't going to say, oh, I'm worried about that same thing happening again. No, we assume you fixed it, and we're going to check and make sure you fixed it. So it's not as if we're insuring against the thing that we know is going to happen a second time. No, it's really insuring against the unexpected. And because of that, and it's probably the same way in the investment world, you need to build a big enough portfolio that you can balance out those peaky risks, those tail risks, with the rest of your portfolio that is a balanced, homogeneous, or at least close to homogeneous collection of risks.
Yeah, for me, it's leadership, determination, and grit. So I'm fascinated by this, underwriting human beings. I'm like, it's one of the coolest things ever. My friend Lylan, who's on the phone over there, he's a fellow Kaufman fellow. Silent. But we're, Brannon's a VC. What we do, early stage VCs, is, not the fire alarm, launch. Listen, yeah, sorry.
May I have your attention, please?
Yes.
May I have your attention, please? The Intrepid Museum will be closing in 30 minutes. The Intrepid Museum will be closing in 30 minutes. Thank you for visiting Intrepid Museum.
Yeah, so I'm fascinated about underwriting humans, right? And so leadership, determination, grit is core. You're looking for something in their past that shows that they're an outlier. They did something different, right? One of the coolest things I remember when I was an investment banker, and when I was an officer in the military, is I was speaking with the enlisted when I was a banker. I was an associate at the time. I was speaking with the analysts. And just how did you grow up? Like, what did you? And a lot of banking is really weird, because banking, typically the analysts went to better schools than the associates, right? Because we were supposed to be an associate, probably didn't go, you did something non-traditional, then you went to business school, and then you were trying to get a banking analyst. They're going to be there for 2 years and go to a private equity firm and be captains of the universe, right? And so I would hear these different stories, like my father made me do 70 math problems a night until I was 15, and we got in a fight, and my mother was like, okay, you can calm down, right? And then I got a full ride math scholarship to NYU, and then I got this job here, right? Making $200,000 a year as a 22-year-old, right? And so you're looking for things like that, and one of the, and you're looking for leadership, determination, grit, and people who won't quit. You'll keep running these experiments. Also character, a la, you'll tell me the truth. I can't help you if you don't tell me the truth, right? Because, hey, guess what? I have a portfolio full of people that are running experiments. So I can probably say, hey, there might be a way to tweak this experiment, do it in a way that's a bit cheaper, right? And so people who have the integrity to come say, hey, I'm floundering in this piece, I need help here, right? I get really worried when people every quarter, oh, things are going great. Well, you're not profitable, so okay. Like they're not that great, right? And then finally, people just won't quit or do something stupid. Those things are extremely important. Like I have a founder, Derek Herrera. This company's Bright Euro, and he absolute stud, Captain America, systems engineering, Naval Academy. Quit the boxing team because the boxing coach wouldn't let him do MMA, so he's doing MMA at the Naval Academy. Goes Marine Corps, became a Special Operations Marine. Unfortunately, was shot by a sniper in Afghanistan, so he's paralyzed from the waist down today. Most people will fold. A lot of people commit suicide. Straight up, I'm ex-military, I'll tell you, right? It is what it is. The guy tried to start a company when he's at Walter Reed, okay? It didn't really get going. Goes back, gets his MBA, starts yet another company, gets venture backing for that company. And then he basically, the company's doing okay. He kind of got pushed out like for a gray-haired, kind of more senior guy who's used to selling after he got the company past FDA approval. Then he starts yet another company, right? The guy's not gonna quit. I don't know what this human being, this is a human being operating on a different wavelength. Now, with all that being said, I don't need you to get shot by a sniper in order for me to believe in you, believe you won't quit. But I do want to see some things in your background that show deep levels of leadership, determination, and grit. Because starting a company is wildly irrational. You can probably make a lot of money doing something else, right? And it's arguably one of the harder things that you can do. Not only making money, not only starting a company to make money for yourself, but starting a company to make enough money to pay me as your investor, right? It's really hard to do.
So, for the founders in the room, first I'll go plug to Sherman. He and his fund and his partner, when it comes to the government and how to navigate that, I think that's the value add, that's the brand. We chose to take investment from them because of the financial chops. We're not selling it to the US government, we're not putting hardware up, but just knowing those two worlds, and again, why New York is so important for that. What I'd say is what's interesting is these guys, whether it's insurance or investment, they play the portfolio game. Founders don't. You're all in. There's no diversity of investment at all. I have made investments. I made my first angel investment, which was Axiom Space, and then I joined them and then became CEO. So there's no diversification there. I'm pretty binary when it comes to that stuff. But when it comes to the startup, and I love the capital efficiency part, there's a general saying, and it's not just startups, but if you're not measuring it, it doesn't matter. So can you imagine for space companies that are spending that much money every quarter and month and raising money and they're not measuring the money? How does that fit into the capital efficiency, right? So I think as a founder, you're a scientist, you're an experiment. And when you go pitch it, you say, hey, this is my hypothesis, these are the 3 experiments I'm gonna run, and nobody expects that it's definitely gonna work, but that's what they're giving you, experimental capital, and then you pivot, hopefully you don't run out of money, and then you raise more when you get to the next milestone.
And for me, I really think about it as this framework where I'm trying to understand, is the founder, is the business resourced to tolerate enough failure such that they can get through the feedback loop of learning and get to that outcome that they're intending? Because most of company building, most of experimentation, most of trying something new is failing. Talk to any PhD, they'll tell you how they failed for 6 years consecutively and then figured something out at the end and then wrote about it. And we call that the pinnacle of science. That's succeeding in science, because that's what it is. And because getting an outcome you don't expect isn't failure, right? So to make this more tangible, the way that I evaluate it in startups is, one, the founder's gotta be awesome, but since he talked about that, I'll share other things. I asked kind of 4 questions in my mind. The first is, does it work? Whatever you're trying to build in space, it's gonna be complicated, it's gonna involve hardware, it's gonna involve moving pieces. Does it work? Or if it's super, super early and it's a couple people with an idea on a napkin, do I believe you can make it work? Which will mostly, again, be based on your background. What sort of things you've done in the past and how that's gone, what kind of training you've had, that kind of thing. But does it work? Does anybody want it? And have you done customer discovery, right, to show me that? Are there a lot of those people out there? Is this worthwhile if we get it to those people? And the last question is, can you get to those people? Does it work? Does anybody want it? Are there a lot of the people out there, and can you get to them? That's generally the questions that I'm trying to get comfortable with and have an intuitive sense of like, yeah, I do believe all of those things. So that speaks a little bit to the planning. Has the founder thought about from first principles what this means if this business actually is successful? And have we thought about what it's going to take to get there? So the second part of meeting the resources is how much capital are you actually going to raise? And so that's the question I sort of ask is, hey, the amount that you need to raise in this stage and the next stage, is that actually going to get you to the milestones that you will need to have the business become successful? Will you have those kinds of resources? And the final piece is the value that you create for the customer. Even if you don't have sales yet, you should be able to map out theoretically what the ROI is for the person who's buying this. For every $1 that they're going to pay for your satellite, can they turn around and turn that into $10 of telecom subscription? And so the 10 to 1 value creation. And then for every $1 that they are paying your business, how many dollars does it cost you to actually build that satellite? And so if it's 20 cents, then you've got 80% margins. And now we're talking 20 cents to $10. It's 50x. And so you sort of look at, I try to do this sort of value creation multiple between your COGS to your revenue and ultimately that to the customer value. And if you can theoretically map out and say, look, we're delivering massive value for our customer and we can do it in an attractive margin, it means a couple things. One, it means that your customer is going to be willing to try your janky solution before it's good, because it could give them $10 for every $1. And so they recognize that at the beginning it's going to stink, and even if it's only half as good as what you're promising me, I'm going to give $5 for every $1. So you get some more grace if your pilot is less than substandard. If it's substandard, you get more time to experiment. Second piece is, when you do start making that $1, if you can use 80 cents of that to build more, to learn more, to go bigger, that's much better than if you can only use 5 cents of that. So if you have nice margins theoretically, or there is a business model where you could, you're buying yourself optionality in the future because now you can redeploy that capital. And what Ted was saying earlier, CEO's number one job is to make sure you don't run out of money. He gave 2 other jobs, but that's the one I remember. And so if you can leverage revenue from your customer to ensure that you have more time to experiment, more time to build, more time to answer those questions, then I feel like, hey, look, we're going to hit some bumps in the road, but you have everything that you need to adjust and accommodate those without the business going under.
So final question before I open it up to the audience here. Why do you insure space? Why do you invest in space? Of all of the other things that you could be deploying your capital to, deploying your energy to, why this industry? Why now? Or in particular with your case, like, why for so long? What about it has continued to make it so valuable for so long?
I want to hear the insurance answer first.
Yeah, so I got into space insurance through aviation insurance. I was an airline insurance underwriter for 1 year, but before that I was a pilot. And in grad school I studied airline economics. So I wanted to start an airline, and then I realized that was a really dumb idea. Got into the airline insurance business and quickly got into the space insurance business. And you know what it is? In space insurance, there are 25 companies around the world that do space insurance, which is actually a lot for any line of insurance business. And in each of those companies, there's an average of 3 people on the underwriting team. And so it's a tiny little community, 75, 80 people around the world, right? 3 companies here in the US, the rest of them in Europe and Asia and so on. It's just a fascinating, tiny little community. Plus, we get to deal with some of the most interesting, intelligent people on the planet. And we get to see, in the insurance business, we get to see ideas years, decades before the public knows about them. I met the guy who started CD radio. I met him back in 87 or 88. That became Sirius satellite radio. They started in 99, I think. They launched their first satellite, 97, 98, 99. XM radio then came along in 2000, 2001. And the business, took off from there, and they eventually merged. But I saw it, more than 10 years before it was even a thing. And that's really cool. So I'll just say it's the cool factor.
My answer for space, other than being cool, is when I look at, I feel like I'm still young in my venture career. I'm still a younger man, youngish man. I still have quite a many years. I mean, I can't even retire for 20 some odd years, right? So legally, right? So, and I think that if I have to look out from a multi-decade stance, there's a few industries that I believe if you get in now, you're getting in really early, and you become wildly credible over time. You get to invest in trends pretty early on because I can assess, with space is one of these, that we are going to need it. We are going to increasingly use it, right? Be in space and operate in space, et cetera. And so I think it's arguably one of the most lucrative places to invest amongst all the things out there. There's a couple other things. Tech bio is huge. I definitely think automation and robotics is huge. A lot of stuff around AI is huge. But I think that space is probably in those kind of big 5 categories where if you were a new investor, if you're like 21 years old, coming out of college, something like that, and you wanted to invest, I think this is arguably one of the most lucrative places where you can be investing at this at 21, and you'll be investing at this at 61, right? And so there's very few industries that exist like this.
So the question is, why are we investing time, energy, capital into it? I want to correct one thing that Walter said before, which was
from the stage with a microphone. Is that what
sorry, last time I did this, I forgot. We're putting on a great conference in October called Uplink. Now I'm going to call you out. He said I'm developing this company almost in a chauvinistic manner in New York. I don't want to get canceled. It's not a good word. Let's say in a patriotic manner. Remember the whole Alexander Hamilton thing? Like, we're in America, and I'm inclusive. So, bringing it back to New York and the coolness factor. I've had this. This is not why I'm investing in space, but I just want to tie back to it. I've always wanted to have the coolest job at dinner parties. And in New York, that's really hard and really easy. When you're with a bunch of lawyers and bankers, super easy. But there's a lot of very interesting artists, entrepreneurs, immigrants who come to New York and tell cool stories. So I just think, working at ESPN was a coolness factor. Sending astronauts to space is pretty fucking cool, right? Like, financial exchange, not as much. But I feel like I got my coolness factor. My answer why I'm spending my time and energy is very simple. It's because. And I promised myself I'd go this whole panel without bringing up my friend Steve Wolf. But he wrote a book called The Obligation, and I actually do feel it's my obligation. When I was 3 years old, my parents took me to Kennedy Space Center. And I know this moment. I appreciate your vulnerability about mental health and the military. I've struggled with mental health my whole life, and when I have a moment of presence, I never forget it. And when I was 3 years old, we get out on the tarmac, and I look at that big building, and I ask my parents, what's in there? And they say, spaceships. And I'm getting goosebumps. I'm literally getting goosebumps. I can teleport back to that moment. My heart, my soul, my mind all exploded. Simultaneously, 3 years old. And I don't believe in a Lord, our Lord, your Lord, my Lord, doesn't matter, but I believe in the universe because it presented itself to me. And it aligned. And life got fucking really hard after that. For that moment, I knew what it was. It took me 40 years to get back to that moment, and that's going to be the rest of my life.
Well, I was going to talk about how good of an economic opportunity it was.
They're not mutually exclusive. Round 2 again.
I promise, I do think it's cool. I did work at SpaceX. I was part of the mission and underpaid because it was so awesome. I do also think it's cool. But also, I'm excited to see what the industry becomes of people accessing space. And if you just look at what SpaceX has just done and shown is possible, if you drop the launch cost, if you think about the space shuttle cost in 1960 to now, it's maybe 200, 500 times cheaper to get to space. If anything gets 500 times cheaper, I'm going to do it. Anything. And so you start thinking, all right, what happens when people start putting more space, more infrastructure up there, more satellites up there? people start going there. We went back to the moon for the first time in 50 years. So at least we went around it. And so you start to see, I mean, that wasn't because of SpaceX, but the renewed interest and the renewed vigor towards innovation there. And you say, what if we did go to Mars? Is there actually gold on some asteroid that's floating around, or whatever critical resource? Or can we actually develop drugs in space or semiconductors in space that give us novel applications and a better livelihood here on the Earth? I just feel like every time transportation has gotten cheaper, and you have boats and you go to a new land, massive economic opportunity. Or you have railroads and you can cross the country and you start industrializing the entire country, massive economic opportunity. Now you have the bones for a real industrial base. And so every time transportation to a new regime becomes cheaper, huge economic tailwinds follow that. And so it seems to be just in humanity's nature to try to invent and go to that frontier. So I think it's incredibly exciting, and I think there's also a lot of good business to be done.
So the risk is worth it. Yes.
Yes.
Great. We'll open up to the audience.
Yeah, I have a question on the insurance side, actually. So as launch costs have dropped and there's been hundreds of new entrants into the industry, you're seeing a bunch more novel applications and new technologies. And a lot of them are from younger startups. And in that case, a lot of these missions are done where we're caring about capital. We're trying to be as capital efficient as possible. And that means a lot of these missions are a lot cheaper than what we've seen with legacy programs. And in that, when it comes to insurance, it's extremely technical underwriting process that takes a lot of hours, and that costs a lot of money. And sometimes for some of these cheaper missions going to the ISS, or even smaller satellites, CubeSats and things like that to test new technologies, it seems like this barrier of what you actually can insure is actually quite high because it costs so much to underwrite those missions. So do you see that there's a gap in enabling new entrants to actually get insured and actually deploy new technology, or is this something that we'll just have to live with?
That's a really interesting question. So let me answer it in a little bit of a circuitous way, but that's a very important question. The dynamics of the space insurance market are changing dramatically. Back, 20, 30, 40 years ago, it was all about big geosatellites that were 100, 2, 3, 4, $500 million values, big assets. And so you needed that amount of capital in the space insurance market to cover those big risks. Nowadays, a CubeSat, $50,000, and launch it, another $50,000. It's $100,000. So so maybe it's $1 million, maybe it's $5 million. Still pretty cheap. The problem in the space insurance market today is that the supply of capital has remained fairly constant. Yes, some companies have pulled out, others have come in, but the supply has remained pretty constant. The demand has dropped precipitously. You have very few big geo satellites nowadays. Launch costs are down, satellites are cheap. If you're a startup and you've raised $20 million or $50 million and your $500,000 satellite fails, you just go get some more money and you build another one. You don't need insurance. The second dynamic there is that constellations, by their nature, have built-in spatial diversity. They don't need insurance. If you launch 100 satellites and only 90 of them work, you're fine. So there are some big changes coming to the space insurance market. The other side of that equation is the capital. What's really interesting is there's some PE money that's actually looking to get into the space insurance market, which is really interesting because space insurance is very simple. It's what's called all risks. It covers everything. It doesn't matter if it was badly built or you were hit by a micrometeoroid or orbital debris or space weather or whatever. It's insured. What's not insured? War, hostile action, nuclear. Those are not, and cyber. Those are excluded from the insurance. So these companies are trying to find ways to and I'm working with some of them, maybe develop new insurance products for war, for other hostile action, for terrorism, cyber, nuclear propulsion, nuclear payloads, nuclear power. These are big things for the future, especially cislunar and Mars and all that. And there's going to need to be insurance for that. The insurance market, the traditional insurers are kind of stuck in their ways. You're absolutely right. Space insurance is expensive because it's very high risk. It's low frequency but high severity. So it doesn't happen often, but when it does, it's a bad day. So yes, you are absolutely right that the demand for space insurance has dropped quite significantly, and that's a big problem for the space insurance market. And yeah, I'm glad I'm not with an insurance company right now.
Is space weather covered?
Space weather is covered. Micrometeors, it's not. No, there's no act of God exclusion in space insurance. It covers everything unless it's explicitly excluded, and the explicitly excluded things are war, hostile, nuclear, terrorism, cyber. Everything else is covered. Even, hey, I left a screw out of my satellite and it failed. Oops. The customer accepted it, and we're all grown-ups, and so the insurance pays.
And do you think that decrease in demand and actually the decrease in ability to insure lower dollar value missions actually stifles innovation and the speed in which we can move? Because if you're so worried about getting it right and it's a $2 million mission or $5 million mission that just isn't quite there yet to insure, and you as a company are capitalized for one shot at it, right? You're gonna spend a lot more time on this. You're gonna spend a lot more time to make sure that you get it right. Whereas you look at the SpaceX model, you can mess up a lot. You have the capital to innovate. You have the capital to, okay, we saw Rev A, let's go to Rev B.
Yeah, so I would say that if you're in a fragile position where everything relies on this one satellite that you're putting up, that's already a bit problematic, because it's not the things that you can think of that are going to cause that satellite to fail or the launch vehicle to fail. It's the stuff you didn't realize or don't know about, just the random escapes. Somebody left a screw out, right? And we've seen, trust me, in my line of work, I've seen the really dumb failures. Wait, you did that? It's sitting in the hangar where you built the satellite instead of being on the satellite, and so the satellite failed. You forgot to take the lens cap off before you launched it. I mean, come on. That's why you have remove before flight tags. So, I always tell startups, never let insurance be the determining factor in whether your business plan closes. Insurance should not be the determining factor. It should stand on its own.
And I just want to second that, because I think even if you look at like the AST Bluebird recent failure just happened a few weeks ago, insurance paid out for the satellite. It's probably $23 million. But the value of the stock, probably market cap, went down 10%. And they lost the ability to do subsequent launches, and they lost the revenue that they were going to get from that satellite, probably $200 million. So they lost billions. And the $23 million, it doesn't even make them feel better. And so I totally agree with Chris. That shouldn't be the way you close your business model, is banking on insurance. And so whether or not they will insure you, I don't think is the go, no-go signal for a startup. And the other thing I'll say is, the more that startups go out there and put things in space, the easier it is for insurers to do their job, because the better characterized risk modes and failure modes will actually be, because we'll see them. Like, oh, actually now that we have 1 million satellites out there, we know 5 out of 1 million get hit by asteroids. And we weren't sure how to characterize it before because there was just too few. So.
Hey. So first of all, Brannon, I appreciate your comment about the sexiness of the economics of space, because as somebody who co-founded a company to mine asteroids, space is cool, but the day that I have a conversation with an investor and they took the meeting not because it was cool, but because they actually believe the economic vision, that's the day I know there's serious money behind space. I haven't had that day yet, looking forward to it. So the question is kind of related to that, and that is, if you think about 5 to 7 year time frame, there's been estimates that the space economy is going to be valued at $1 trillion, and you can wave your hand around about what that means. But I'm actually I'm interested in what each of your perspectives is in that time frame. What you actually see as maybe an addressable market in space that you're most interested in, or might be the most surprising or the most confident in. Tej, to your comment, I would say you can regard government contracts, but I also agree. I'm more interested in the commercial market aspect of this, but I'm just kind of curious, when you think of that time horizon, what is it that you see as being really driving that value? And I'm curious whether you agree if $1 trillion is in the ballpark or not.
Okay, quick answer, and then I know you guys have a lot of good thoughts on this, but
First thing I will say is an analogy with the smartphones. When the first smartphones first came out, Google and everybody, they called up McKinsey and they said, how many of these things do you think we can sell? And they went back and they did all of their fancy reporting and customer discovery, and they said, 2 million. And they were wrong by 1,000x, more than that. And so we as humans are bad at exponentials. We are bad at understanding the total size of our market. So who said we're going to be worth $1 trillion? You guessed it, your friends at McKinsey once again. It may be way bigger than that. So first of all, that's just my perspective. Do I believe it's real? Yes. How big is it? I think even bigger than we're expecting. Now, what do we underwrite on the way to get there? I think fundamentally, in some ways, we are limited in our ability to be as creative as founders because we have to return money to our investors as venture capitalists. So we start to look at proxies and we say, look, if you make it cheap to get to space, what do I think is going to happen? People are going to go to space. Great. And if people go to space, what's going to happen is going to be a lot of stuff in space. There's a lot of stuff in space, then we need to move stuff in space. We need to de-orbit stuff in space. We need to refuel it. We need to get around it. Those are things that I would say, I'm pretty sure that's going to happen. Because if it became Valentine's cheaper to go to Tokyo, I would go every single quarter. So I think a little bit you need to be able to paint the picture of here's what the near-term wave is happening. And once that happens and there's a flourishing economy, we can have a self-sustaining way to get even further out there. So I try to understand how we're gonna make some money on the way.
I'll also just acknowledge time 2 rapid-fire answers for this last bit.
That's going to be hard for me. But, so first of all, don't underestimate the coolness factor. Take the fucking meeting, right? Like, space taken, right? Second, I have statistics behind this, and I'm going to go back to Steve and the obligation. I do think it's a genetic marker. So I'm going to do this test I did the other day. And my dream is that I no longer see Alexander Hamilton going across the water, but I see a rocket launching from here. And let's just say that world is real, and I'm the guy who can take you there. If I told you right now we can go out to the water and go to space, how many of you would come to me? Right. So same like the other day, about 25%, 30%. Is this how you're going to get me to shut up? Because it's not going to work.
May I have your attention, please? May I have your attention, please? The Intrepid Museum is now closed.
Not for you.
Please make your way to the nearest exit. The Intrepid Museum is now closed. Please make your way to the nearest exit. Thank you for visiting the Intrepid Museum.
Yeah, so that's about a third of us. I believe a third of us are wired to, if you read the book, you don't have to. I don't get a commission for it. But it's this concept of why bees go from flower to flower. They don't think about it. They don't debate it on panels. They just go, right? And that's what I believe our species is. We don't think about it, that alignment of the universe, beautiful. But the fact that we even know there's a universe is kind of crazy. But we were meant to go to other planets. So I think a third of people, and while the industry isn't here yet, this is the experiment that I ran. The beauty of this island, Manhattan, is that, I don't know what the exact number right now, but I think 54 of the Fortune 100 have headquarters here. I did an experiment. I reached out to every CEO of the Fortune 100. Every 100. You're talking about measuring everything and just relentless.
It's my founder, guys.
Yeah. And I only said, hey, I'm Tej. I'm the CRO, not CEO, not founder, CRO of a space company. Guess how many meetings I got? 30.
What?
30. And why did they all take it? Space is cool. And they weren't space is cool people, they were obligation people.
You can hit on that. That was awesome.
So I'll just say two lines of business. On-orbit servicing, space situational awareness.
Thank you all so much. This was fantastic. Evan and Space, thank you as well.